Silver is at $85 an ounce. Gold just crossed 5,100. And a video went viral telling you that 500 ounces of silver makes you a top 1%er among stackers worldwide. That sounds incredible until you do the math. 500 ounces at $85 is $42,500. That is it. That is the entire dollar value of being in the top 1% of silver owners on this planet. And what I am about to show you is why that number is simultaneously the most bullish and the most misunderstood signal in the entire precious metals market right now. If you are not subscribed to this channel, you need to fix that right now. Because what I am going to walk you through today is not on any mainstream financial outlet, and frankly, most silver channel are not talking about this either. We are going deep into the real math behind silver ownership, and by the end of this video, you are going to see your stack in a completely different light. Now, here is what blew my mind when I started researching this. The viral video everybody watched told you the ounce thresholds. 3 ounces puts you in the top 50%. 10 ounces, top 20%. 50 ounces, top 10%. 150 ounces, top 5%. 500 ounces, top 1%. And 5,000 ounces puts you in that rarefied top 0.1%. Those numbers are interesting, but they are also dangerously incomplete. And I need to explain why. Because what is missing from that conversation could be the difference between being financially prepared and being caught off guard. Stay with me on this, because by the end, I am going to show you the specific price levels where each of those tiers transforms from a modest savings position into generational wealth. Let me set the stage with what is actually happening in the silver market right now. Silver is trading at approximately $85 per troy ounce as of today. Gold is sitting right around $5,100, which puts the gold to silver ratio at roughly 60 to 1. Now think about what that means historically. The long-term average ratio sits between 50 and 60 to 1. The modern era has seen it as high as 100 to 1 during periods of extreme paper market manipulation, and as low as 15 to 1 during the 1980 Hunt Brothers peak. At 60 to 1, we are near the historical average, which tells you something very important. Silver has already dramatically outperformed gold over the past year. Silver ran from $31 in January 2025 to a peak of $121.67 on January 29th of this year. That is a nearly 300% move in roughly 12 months. Gold moved from about $2,900 to $5,100 over the same period. Silver outperformed gold by a factor of more than 2 to 1. But here is where it gets really interesting for the stacking community. Let me go back to those ownership tiers and run the numbers at today's prices. If you have 3 ounces of silver, you are in the top 50% of all investment silver holders worldwide. At $85, your position is worth $255. Now let me be honest with you. $255 is not going to change anyone's financial future, but that is not the point. The point is that 95% of the world's population has zero investment silver. You are ahead of 7.7 billion people on this planet just by owning 3 ounces. Now 10 ounces puts you in the top 20%. That is $850 at today's prices, still modest in dollar terms. 50 ounces for the top 10% is $4,250. 150 ounces for the top 5% is $12,750. And then the big one, 500 ounces for the top 1% comes in at $42,500. Now let me ask you something, and I want you to really think about this. The top 1% of global wealth holders control 43% of the world's financial assets. We are talking about hundreds of trillions of dollars. The top 1% of silver stackers own 46% of all investment silver, but in dollar terms, their entry point is $42,500. Do you see the disconnect? Do you see the opportunity hiding inside that number? Now, here is what nobody is talking about, and this is where I need you to drop everything and pay attention. That $42,500 number assumes silver stays at $85 forever. It assumes the paper price accurately reflects physical reality, and right now the data is screaming that it does not. Let me walk you through the evidence. COMEX registered silver inventory has fallen below 90 million ounces. Let me say that again, so it sinks in. The entire registered deliverable silver supply on the COMEX exchange is approximately 88 million ounces. That is a 32% decline from 532 million ounces total inventory in October to 366 million ounces today. The paper to physical leverage ratio sits at 7.4 to 1, meaning there are 7.4 ounces of paper silver claims for every single ounce of deliverable physical metal in the vaults. The COMEX stress index is sitting at 84 out of 100. The all-time high is 88. At the current withdrawal pace, registered inventory could be depleted in approximately 70 trading days. Now connect that back to the ownership tiers. There are roughly 3 to 4 billion ounces of investable silver in the world. 350 million people own some amount of it, but only 88 million ounces are sitting in COMEX vaults available for delivery. Think about what that means. If just the top 1% of silver stackers, which represents about 3.5 million people, decided to take delivery of their physical positions, it would completely overwhelm the entire COMEX delivery system many times over. The math does not work. The paper market depends on the vast majority of participants never demanding physical delivery. And every single day right now, more metal is leaving those vaults than entering them. Now let me show you why the industrial side makes this even more explosive. The Silver Institute released a report in December 2025 through Oxford Economics titled Silver the Next Generation Metal. The headline finding is that industrial silver demand from solar photovoltaics, electric vehicles, and artificial intelligence data centers will drive demand growth through 2030. Solar PV alone consumed 29% of all industrial silver demand in 2024, up from just 11% in 2014. Global solar capacity is forecast to hit 665 gigawatts in 2026, requiring an estimated 120 to 125 million ounces just for solar panels, and that is before you factor in the new generation of 800-volt data centers being built for artificial intelligence infrastructure. The Silver Institute forecasts a 67 million ounce supply deficit in 2026. That would mark the 6th consecutive year of structural deficit. Annual mine production sits around 830 million ounces. Annual demand exceeds 1 billion ounces, and 72% of primary silver is produced as a byproduct of copper, zinc, and lead mining, which means production cannot respond quickly to rising silver prices. The mines that produce silver are not even silver mines. They are base metal mines that happen to produce silver on the side. So now let us recalculate those ownership tiers at different price scenarios, because this is where the picture changes dramatically. Tell me in the comments right now how many ounces you are holding. I want to see where this community stands. At $100 per ounce, 500 ounces is $50,000. Top 1% at $50,000. At $150 per ounce, it is $75,000. At $200, which would only match the inflation-adjusted 1980 high of $194, it is $100,000. Now you are talking about a meaningful financial position, and at $300 per ounce, which multiple analysts have modeled as achievable during a supply crisis, 500 ounces is $150,000. That same top 1% position goes from $42,500 to $150,000 without adding a single ounce. But here is what really keeps me up at night when I think about this. Drop hold in the comments if you are not selling before silver hits $150. The 5,000 ounce position that puts you in the top 0.1% at $85, that is $425,000. At $150, it is $750,000. At $200, it crosses $1 million. At 300, it hits 1.5 million. At $500 per ounce, which would represent silver achieving roughly half of gold's current market cap, adjusted for above ground supply, that position is $2.5 million. From a position that today could be accumulated for less than the price of a modest home. Now I need to be clear with you, because this is not financial advice and I am sharing what the data shows. Based on the historical pattern, the gold to silver ratio has a tendency to compress dramatically during precious metals bull markets. In 1980, it hit 15 to 1. If gold stays at 5,000 and the ratio compresses to even 30 to 1, that puts silver at $167. If gold runs to JP Morgan's target of 6,300 at a 30 to 1 ratio, silver hits $210. This is not speculation, this is mathematics. The only question is timing. And here is what the viral video about percentile rankings completely missed. Your rank does not matter. Your timing does. Being in the top 1% of silver stackers when silver is at $85 is very different from being in the top 1% when silver reprices to reflect the physical reality of a structural deficit, a depleted COMEX vault system, and industrial demand that is accelerating while supply cannot respond. The stackers who accumulated their positions at $31 last year are sitting on nearly 200% gains. The ones who bought at the peak of $121 in January and held through the crash are watching their positions recover, but the ones who understand where this market is actually going based on the supply deficit data, the COMEX drain rate, and the industrial demand trajectory, those are the ones who are still accumulating right now. Every reference I cited in this video is in the description below. Go verify every single number yourself. That is what separates this channel from the noise. There are 3 types of people watching this video right now. The first type heard $42,500 and thought, well, that does not sound very impressive for a top 1% ranking. The second type ran the math at higher prices and started to understand the asymmetry of the opportunity. And the third type already knew all of this and is quietly adding to their position every single week, while the paper market gives them a discount on physical reality. Which type are you? Comment below and tell me. If this video opened your eyes to what your silver position could actually become, share it with one person who stacks silver and does not understand the bigger picture. Hit the like button if you want more data-driven analysis like this. Subscribe and hit the notification bell so you never miss an upload. Every individual must assess their own circumstances, risk tolerance, and investment objectives. But I will leave you with this. There has never been a time in history when the gap between paper price and physical scarcity has been this wide, while industrial demand was this strong and growing. Physical reality always wins. The question is not if, the question is when. I will see you in the next one.